All right, and welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So markets here, again, having another up week. And like I suggested last week, don't fight this rally. And if you're long, just keep kind of trailing those stop losses higher. Market is in go mode here as we get into the middle of July. We've got a lot of positive momentum and positive flows here. Really kind of coming into the next week or so. But we do see, or I do see a little bit of weakness. The one area I see it in is potentially technology. So the QQQ had a pretty good sell yesterday. And granted, we're only a few points off of all-time highs, but we definitely had some distribution volume behind the Qs. Now we had CPI this week, and that came in much cooler than expected. Month over month was the first negative print since 2020, and so the market really rejoiced in that. And the story of the week, though, was the Russell 2000. I've been telling you guys, small caps are coming, and this has been probably the trade of the year. In my service, I know that members were long here and made an absolute killing on this, and we've seen this rotation finally. Not so much even rotation, but deleveraging out of short positions, right? So there's been a lot of fighting this rally. A lot of people trying to short, a lot of people trying to be short small caps, and that CPI print really caught everyone with their pants down yesterday. You had a mega surge in the IWM. I've been telling you guys about this wedge pattern. You can see a little bit better on the RTY. Look at that move there, new 52-week highs. And we're seeing that kind of money rotate a little bit. So as I said a minute ago, look at technology and look at the SMH. Definitely distribution volume here in the last 2 weeks. So chips, I know it doesn't mean they're going to go straight down. That doesn't mean that they're going to not make new highs. But I do think we're seeing some tiredness here, and we are starting to see some rotation. I've been talking about IGV quite a bit here. IGV did pull back this week, but it's still holding up nicely. So certain areas of technology, heck, even biotech, having an outside move. But I think that the trade here, the next trade over the next couple of weeks to maybe the next month, is going to be the hated sectors. So anything that's heavily shorted, take a look at regional banks like KRE. Breaking above this trend line here, it's heavily shorted sector, very, very hated sector. Even commercial real estate, VNQ, been telling you guys about this pattern here, and good outside move there. So we're seeing that kind of rotation out. And I'm looking at this, doing this in real time on Friday. You're gonna see the breadth here, 448 advancers. So what is red today? Well, not a lot. Yesterday, the only thing that was red was the Mag 7. So again, we're starting to see that kind of rotation there. And, as long as that continues, this market can go higher. Now, that doesn't mean we can't pull back or won't pull back at some point. Obviously, inevitably, we will. But right now, the market has a lot of momentum. And when the Russell 2000 is leading, that is a good sign for the market and the strength of the market. We're also seeing now the Dow above 40K. And that's going to be a new all-time high, new all-time closing high here today. So, again, market's continuing to be strong. And, a lot of liquidity out there. So we have hit my target. I said 5,600. We're now not that far away from 57. We could be back testing this old trend line here. I've left that on there. I mean, it's not that far away. I could see that even getting hit by July OPEX before we do have to stall out again. But again, markets here pretty strong and really good week. Now, again, it's, this whole the macro thing is kind of destroying a lot of narratives. I've talked about this. I've dubbed it kind of the summer of narrative destruction. Yesterday we had obviously the CPI, very cool print, and everybody was talking about deflation, recession, rate cuts. Rate cut odds went up to 83% for September. And I see these guys, all these pikers are trying to bet on this big home run recession trade or not recession trade, and I just think that they're fades, honestly, because yesterday you see crude, last 2 days were green with that so-called deflation print in CPI. And you also look at, and then another thing that was talked about, the yield curve is uninverting. The yield curve is uninverting. If you look at the 3-month 10-year, it is widened over the last 3 sessions by about 8 basis points. So that's not an inversion. Yes, the 210 has started to come back, but this market's not really, I think there's a lot of posturing here, a lot of narratives, and I think it's just best just to cut through the noise here. This morning, PPI came in with a full sigma beat of, I think it was double the expectation. So PPI coming in hot this morning, and yields not really doing a ton. So again, market right now, stock market at least can ignore these things for a while, and it's confusing a lot of people. But again, simple it down to the charts here, and that's been working so far. But anyways, markets here. We'll see what we get. We have OPEX next week for the month of July, so I'd expect kind of neutral to upside, and maybe a little bit of a pullback after that week. But again, we'll see what we get going into that. Dollar yen took a little bit of a hit, so the yen getting a bid. Take a look at this short positioning here in this, massively lopsided compared to other Forex trades or pairs. I talked to Jason Shapiro on my channel about this with a great interview, and he essentially kind of confirmed what we're seeing here, which is that the yen trade is very crowded. Fundamentally, yes, it makes sense, but positioning matters, and yen intervening there. Again, Jason Burak, have been telling you for weeks now, don't bet against this. They have swap lines open. We're not making that up. So that's the status of things right now. But that's starting to move around here. We are seeing a little bit of data come in. Again, we still have the rate cut odds are still heightened. But again, markets are in a mode here where we're in that summer doldrum period, and we're not going to see a huge reaction, I don't think, until we get closer to the end of summer. But anyways, markets again holding up. Let's go through our sectors here. We talked about the semiconductors. I still think this is getting top heavy, and we are seeing distribution volume. IGV I still like. I think it needs to do some consolidation though. But good price action there, a good little pullback. Dow Transport's breaking above this little trend line here. So transport's coming back up, and a good rally there. Again, rally kind of broadening out to other sectors now. We can look at the 2-year here. So the 2-year coming back in, to be fair. Yeah, we're seeing a little unwind in the 210. So 10 years still kind of holding this low here. I don't really see us going much past 4% though. And there's a lot of people getting whipped in and out of these bond trades. Everybody's betting on a recession. Then a week later, they're betting on not a recession. And this has been a very whippy trade. I've avoided yields for a while here. I don't think they're going to go much lower. But 2 is definitely coming in here, and that'll be respected in the near term. Housing here. So XHB breakout. I talked to you guys about this. I said we're starting to put in a bear flag here, but if that fails and we get above this red bar, watch for this to become weekly bull. And that's exactly what happened here. Big, gigantic outside move. That's about 10. Yeah, that's over 10% there in the last week on XHB. Actually, in the last 3 days. So massive move there. VNQ, massive move. We talked about that. Been telling you guys this pattern was viable for a long. That has worked out. XLF pressing up against all-time highs. You can see Berkshire doing nice work there. Nice wedge pattern. We did have some bank earnings today. Citigroup took a little bit of a hit. Wells Fargo and JPM down. But again, Berkshire kind of making up for those losses. They're not really anything terrible here, though, on any of these charts. KRE, regional banks, again, continuing higher. We talked about that in the beginning of the video, and I think this can get up to 55, 56. So a lot of heavily shorted sectors, a lot of hated sectors are rallying. KBE, large banks, again, I think that wants 52.50. So very good move for some of these beaten down sectors. XBD broker dealers, new all-time high, new all-time closing high. The oil market's very interesting here. So, and again, just these narratives keep flipping, right? PPI was hot today. CPI was cold yesterday, and oil was the opposite both days. So again, these narratives are getting really crushed here. But earlier this week, we did hold that breakup bar low. We tested it and spiked it. I don't know. Oil's interesting here. I had it topping out early July, and that may still be the case. It could still put in a lower high right here. But, if it stays firm, this could turn into bull consolidation. I wouldn't rule it out. So, seasonal trends are a guide. They're not the be all end all. They can fail. So again, we just kind of defer to the chart here, and I don't know. Oil's holding up. I don't want to see it close below 81.38. If it does that, I would get more bearish. But right now, if it stays up here, it could make a run at 86, 87 again. So oil's actually holding up okay. Let's take a look at gas too. Yeah, gasoline hanging in there as well. Gas looks a little softer, but definitely interesting. XLE here, again, good move after the dip early in the week and a good bid. Again, rally broadening out to some of these sectors. Energy is still pretty hated. I think it could get a bid just based off of that. XOP there is holding up, and I do like the OIH. That's put in a higher low there. Didn't quite get down to where I wanted to buy it, but decent price action there. We had a bill, I believe, yeah, Biden announcing a bill for uranium, CCJ in the middle of the week. Very good move there. And again, I've been telling you guys for weeks and months now, honestly, that there's nothing wrong with this bigger trend. And it is continuing to make higher lows. And there's the URNM and the NJ, and there's no problems with any of these on the bigger time frame. Nat gas spiked the low this week, actually even today, and it did come back. We might have a local low in place here. We'll see. Nat gas has been really tricky lately. We hit the low, bounced up, couldn't hold it, closed below that opening gap down low, and now today we tested it again. I don't, if this can carve out a bottom, I could see 250, maybe 260. After that, you're going to probably pierce 220, 215 if we can't hold. Typically, nat gas does bottom again, going back to seasonal stuff, tends to bottom around this time of the year and then kind of starts to slowly uptick into August and then really starts to move into September, October, November. But, again, it's not always perfect, but it's holding the lows right now. It's definitely interesting down here, but I'm leaving it alone at the moment. Dollar index taking a hit. We talked about that. As long as it holds 103.88 on a weekly close, it's still okay though. So just be aware of that. If we close below that green bar though, that's a failure. But dollar right now is holding up. Gold, very good week. So I think gold is just set up very well macro wise. If we get rate cuts, it's bullish gold. If we get more inflation, that means instability. That's bullish gold. So gold is in really good shape here, and it may be. It can break out now. I was looking at more towards August. It might still happen. It might, could get rejected here. But what I like, and this happened earlier this week. I mentioned this the other day. Look at that move on GDX. So GDX making new 52-week highs. With gold not making new highs yet. It's still basically at the highs, but it hasn't made a new high yet. The fact that the miners are leading the metal is always a good sign. Beautiful break there. Looks great. GoAU, GDXJ, these both look good. SIL curling up, and J as well. Silver also holding up this week, although it was kind of, flat to lower today. Nothing wrong with this pattern though. So metal's looking pretty good here. Again, I kind of had these breaking out a little bit more towards the later part of the summer. That could still happen. Maybe this is a little head fake here, but the miners are strong. I would not bet against them. So good action there in the metals. Platinum still holding up. Still got higher lows here. And I think this is getting ready too. Then palladium here. This is still the sleeper. But you got a double bottom now. So again, something that it could be tucked away for a while. Not something I would look to trade in the near term at all. Copper was showing some weakness yesterday, but bounced back today. I'm not sure what this wants to do in the near term. Yesterday, it took a hit off of that cold CPI. Today, it's bouncing up. Pattern-wise, it's okay. I could see 489. I think 487 to 489 was the level I had in the short term. Yeah, but if it starts to roll over, you're probably going back to about 420. And it may be viable there for a bounce. But we'll see. Bitcoin, I had a buy signal on this last week. I still have it, but it's fading pretty fast. It does have higher lows here. There's a lot of dynamics going on here. So you have higher lows, which I like, but you also have kind of a bear flag look here. And the buy signal that I had was kind of based on the weekly chart. And if you'll recall, Monday I said, you don't want to see this go sideways. And that's kind of what it's doing. There is, if you look at the hourly, there's a seller sitting here at 58, 55 to 59, and they're not letting it get above that. Every time we get up there, someone's hitting it down. I know Germany was selling, I guess, yesterday, but somebody's hitting it right there. If it can break above that, I think you can shoot up to 63 really fast. But right now, I'm just going to be neutral on it. So what you don't want to see if you're a bull is more consolidation here. You want to see it break through 60 and then up to 63 pretty quickly. Because the longer we go sideways here, the more of a base we can build for and move down. But overall, it's holding up, and I'm kind of neutral on it. I took a fractional gain on it today, just full disclosure, just so you guys know. So I did play that, and I did exit for a fractional gain. I just don't want to hold into the weekend. Low liquidity, you never know what they can slam it, at midnight tonight on Friday night when nobody's paying attention. I've seen it happen before. So, all right. Anyways, so again, SPX here holding up. OPEX next week. Don't fight this tape. Market is still strong, and I still think we can climb higher. That doesn't mean it was in a straight line, but I don't really have a ton of headwinds here for this market for the next really month or so. But we can talk about that more as we get closer to those dates. So anyways, guys, you have a good weekend. Take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll see you guys all next week.